how to find valid support and resistance. Most traders draw lines everywhere and wonder why price ignores them. I will show you what makes a level valid and the one trap that catches everyone. Let's start with support. Look at this chart. Price drops. Now watch at the bottom. Price reaches this level, bounces, comes back, tests it again, bounces, a third time, same level. Each time buyers step in and push price back up. That is support, a level where buyers defend. The more times price bounces, the stronger the support. Notice after the third test, price launches upward. When you see 3 clean bounces from the same area, mark it. Now resistance. Same chart. Price rallied from that support bounce. Pushes up here. Then hits this level. Gets rejected. Tries again. Rejected again. And again. Sellers defending this area. Every push-up gets weaker. Highs get lower. That is resistance. The ceiling price cannot break. Look at the upper wicks. Long wicks at resistance means sellers are aggressive. When the same level rejects price 2 or 3 times, mark it. That is real resistance. Now here is the key. Not every level is worth drawing. A valid support or resistance level needs 3 things. First, multiple touches. 1 bounce means nothing. 2 bounces is interesting. 3 or more, you pay attention. Second, clean reactions. Price should bounce sharply. Look at this chart. See the reaction? Sharp candles. Quick rejection, not weak sideways drifting. If the reaction is aggressive, the level is real. Third, the level should be visible on higher time frames. If you see the same zone on the 1 hour and the 4 hour, it matters. 5-minute chart levels are just noise. One more thing. Support and resistance levels are where stop losses sit. Below support, above resistance. Smart money knows where these stops are. Watch this chart. Price drops to support, then breaks below it. Most traders panic. Their stops get triggered. But look what happens. Price immediately reverses. Shoots back up. That break was not real. It was a liquidity sweep. Smart money pushed price below support to grab those stop-loss orders, then reversed. This happens every day. When price breaks a level and instantly snaps back, that is not a breakout. That is a trap. Never place your stop at the obvious level. Wait for the sweep, then enter the reversal direction. Quick summary. Support is where buyers defend. Resistance is where sellers defend. Valid levels need multiple clean touches. And always watch for the liquidity sweep. The fake break trapping everyone. In the next videos, we combine support and resistance with order blocks and fair value gaps. Subscribe so you do not miss it. Drop a comment telling me which concept you want next.